right, so we closed at the top of the bull confirm range, although we did briefly test the outer bounds of our total range. The failure to break out here isn't really established yet, but we're not in the most bullish position. Like, this is not like a bull flag or anything. We may see this breakdown next week, we may not. It does appear that there's some 1 DTE calls sold to the upside, especially the upside of 46.05. And there is still some positioning in this range to hold us up. Next support to the downside is 45.75. Below that, support starts to fall apart now. We have slightly moved into a higher range, but we haven't really established a foothold above 4,600 yet. And so I would say that continuing to hold this range without failure is still tentative. GME continued to see a small amount of covering today, but not a lot. We did hold 15 into close. It does look like there's some effort to short into the end of the day. This could just as easily turn around next week as it could continue realizing covering. Remember that T+2 from the day before yesterday, or Wednesday, when we ran pretty hard, is not over until Monday morning. And so there may still be some leftover effects. Upstart is in fact starting to see more covering, unlike GME, which is nearing its limit, and blew substantially through Gamma Max today, which was at 29. For this to continue up, it'll either have to start squeezing out shorts, or it will have to see an influx of call interest. I will say that Fed Fund futures pricing in more rate cuts is inherently bullish for Upstart, and offers hope of credit market stability in the future, which Upstart very much needs to be profitable with its business model. So I would watch it very closely. I think there's some chance that if markets like indexes are able to hold their current position and no significant liquidity is provided by falling indexes, that there's a very good chance that this runs, and it may run hard again. So some exposure may not be a bad thing. Fubo kind of defeated into the end of the day, but there's really still no covering going on there. Yeah, I think it's still sufficiently liquid that they can kind of hold it around this price point. It seems like very little shorting is needed in order to maintain stability above $3, but it would need to be shorted significantly harder to get back below $3. Top almost ran out of liquidity into the end of the day today, and I guess we did see a little bit of price improvement at the end of the day on it, but it is very heavily shorted. There is little to no covering that has occurred, and I would imagine that they're running out of room to play hot potato. As you can see, every time they kind of roll over that exposure, they're getting a little closer and closer to realization of that liquidity. And so this is probably going to break sooner rather than later, although it's hard to say exactly when. It may break Monday. I would say that one more good push up in the index might be enough to force it over the edge. And if it does go over the edge, it's significantly more illiquid than it was back here in October, and even more illiquid than it was back in July. So the range, well, it's probably really dependent on how many calls people buy, but I would say that it could really get moving. Again, very low liquidity, very low available ETF liquidity due to their near bankruptcy. So yeah, that might still have some potential. Broad commodities today, we saw a little bit of a bump. These seem to be kind of rounding off as they've broken down out of the more recent trend, but there's still some hope that the stimulus coming into China will reignite manufacturing and pick up some commodities demand. So we'll see how that plays out. I mean, obviously they could fail again. I already went over TEP, but is TEP doing something like crazy in after hours? No. Or was I? Dixie down today, and yields way down today. Massive drop in yields. They're now roughly where they were, almost back to where they were in the middle of September. They haven't fallen that dramatically, but they have They have definitely come down from their peak quite a bit. Dollar has come down far more, I think, than yields have over the same period of time. Correlation on the 1 month started to turn back the other way today, but part of that probably has to do with us finding a slightly higher range and a little bit more of the breadth coming in on today's run as tech continues to underperform, and we are seeing like a distributive effect across most of the tech sector. Like the Mag 7 are all looking very distributive, and so we may still see a little bit of stability in correlation as maybe the dispersion trade shifts from its larger targets in the Mag 7 out to a wider scope, possibly in like industrials and manufacturing. And we may see market cap kind of move over that way as people seek out defensives in a contracting economy. The yield returns on volatility dropped again today, pretty obviously, as yields rose. JPY carry trade lost 26% today. Bond volatility is back up, but it's not having as much of an effect on the correlation index as we were seeing before. So we probably want to see bond volatility rise a little bit higher in order to pull that up with it. Skew up and core up, which is generally speaking inverse what we would expect, but the cost of tail risk hedging and the odds of a tail risk event increased today by about 4% on the index. And well, I would say this increases the chance of like a 2 sigma move by about like 1 or 2%, and it increases the chance of a 3 sigma move maybe like 0.1%. So not a huge move, but when skew gets into these upper bounds above like 32, the chance increases greatly. Lastly, I guess like VIX correlation still negative, although VVIX correlation is starting to fall off. So that's interesting. This may have peaked. So we might start to see a turnaround in volatility here. But right now, the VIX contract in front and VIX are very disparate. And lastly, S&P stocks over their 20-day moving average moved from 77% of the S&P to 84% of the S&P by the end of today. But we are starting to see a downtrend in that, and that may continue over the coming 2 weeks. I think that's about it. You want to see the heat map? Sure. Yeah, so, not a lot of gains in big tech. Microsoft, Meta, Google all down today. Apple slightly up. Amazon up. So we see broadly finance doing well. Consumer services, producer manufacturing, health services, process industries, transportation doing very well for a second day in a row. This is partially on hopes that the economy is going to reignite in some substantial way, which is stupid. But energy and utilities still doing pretty well. And these are, a lot of these are like communication, utilities, consumer durables doing well, except for Tesla. Commercial services doing well. These are fairly defensive sectors, right? And so it's interesting that we're seeing such massive outperformance here, and kind of underperformance in big mega cap tech. It's might be notable after about 2 days of it. It really might not. But yeah, lots of good healthy breadth in the market with underperformance in tech. However, remember that these tech companies, while they're distributing out and showing lower performance, represent 30% of the S&P 500 right now. So something to consider. Anyway, thank you guys so much for tuning in. I will be around on Sunday for the members only stream at 12:30 p.m. Feel free to come and join us while we talk about JFresh's hot tub, some other things. Did I win? What? The prediction? I think you did. I think you won. What was your prediction? What was the other prediction? You didn't have predictions. You had one prediction. I don't remember. Okay. You probably did. Did you vote up? You voted up. I remember you were trying to inverse yourself. Anyway, I'll see you guys on Sunday. I hope everyone has a great weekend. Thank you for tuning in. Congratulations to all of you that did well running some of the meme stocks this week. That was pretty fun. And for those of you that did pretty good on the S&P as well. I know a lot of people seem to be pretty happy, and judging from the Majority of people, I would say. Most people did pretty well. So well done. And I'll see you all Sunday. Have a good weekend, guys. Later.